Let's take a look at money matters. The JSE is slightly up, extending last week's gains as investors continued monitoring economic data while also assessing the outlook for interest rates. For an overview of how the markets are faring so far, we speak to Portfolio Manager at Rand Swiss, Gary Booysen. Gary, thank you very much for your time this afternoon. Let's start with that, an overview of how the Rand is trading at the start of the week.
It's a little bit weaker than we ended off on Friday. So against the US dollar, we're trading around 18.40, about 22 Rand 95 for each British pound, and 20.10 for a euro. But really, this does seem like a US story more than a South African story. Everyone looking at those US interest rates, trying to gauge when the next cut will come, and we track the Fed fund futures quite closely, and that's currently saying there's about a 30% probability that we'll see interest rate cuts from the US by the end of the first quarter. Of course, a big week for South Africa as well, because we have our own monetary policy committee meeting. We will hear whether or not there'll be, I suppose, a hike or a cut. So the expectation is that there will be no change on Thursday. And of course, we've got that very, very important South African inflation data out ahead of that. So lots of risk events for the currency, but currently not a little bit weaker, but not majorly different from Friday.
Okay. Oil has nudged higher today, extending gains on expectations of OPEC plus deepening supply cuts to shore up prices. What's going on?
So the oil market has been a little bit weak this year. If you look at Brent crude oil, it's down around 5.5% year to date. And there is obviously the expectation ahead of that OPEC Plus meeting on the 26th of November that there could be further output cuts. So there was a JP Morgan report out recently just saying that, into the first half of 2024, it is expected that there's going to be weaker global growth. And there is the chance that, OPEC Plus led by Saudi Arabia will, cut production against, I think, what the general market expectation is. And that report, I think, fueling some speculation that OPEC Plus will look for higher oil prices and extend those cuts. We're also seeing over in China, they're back to building inventories rather than drawing down on their inventories. So also a little bit more demand coming out of China, which has been slightly supportive of Brent crude oil, but we're still hovering around $81 a barrel. And I think definitely need to watch that 26th of November meeting closely, because that could be the catalyst for higher oil prices from here.
All right. Astral Foods has reported the first loss in its 23-year history. What drove the declines?
A very, very difficult operating environment for a company like Astral. So the first is obviously the bird flu that I think most people are aware of. This cost the business over 1 million birds and around 400 million, just in increased costs as well. So, unfortunately, there's no sort of government relief when there's an avian influenza like this. At the same time, it looks like insurance payouts won't cover this either. So, difficult when you've got something like this very aggressive strain of bird flu going around. At the same time, of course, we understand the rolling power cuts, and this has a huge impact on a business like Astral. This means that they can't slaughter on schedule. It generally means that they've got to feed their birds for longer. It results in heavier birds as well, which is not optimal for their slaughterhouses. And of course, they've had water disruption, so really, really difficult. And to top it all off, the South African consumer also under a lot of pressure. So, unable to push through, aggressive price increases as consumers start looking for cheaper forms of protein. So a very, very difficult time for the business. I mean, they still managed to, on the top line, make 19.3 billion. That's only a decline of around 0.4%. But that earnings per share number telling you the whole story. I mean, swinging to a 621 million rand loss for the period.
Let's take a look at PPC. It's published its results for the 6 months ended 30 September 2023. What stood out for you?
Well, I think the share price reaction is what's really standing out. So the stock up around 11% on the day. Now, that isn't quite thin volume. But I think what we're seeing in the PPC results is a slow recovery off, yes, a very low base. But I think the business getting back to what it's supposed to be doing. So, focusing on the South African operations, they're disposing of the 51% stake that they have in their Rwanda business, really to focus domestically. They are also getting some relief from tariffs. and that's a good thing and a bad thing. It'll help the business. There's no question about that. But it does push up the price of building in South Africa, because essentially it's just a different way of taxing consumers. On the revenue line, revenue up over 20%, so that looking very good. Earnings, we did get a trading statement out on the 9th of November, so earnings right in the middle of the range that were given. They were expecting headline earnings per share between 25.5 cents and 26.5 cents. They delivered right in the middle at 26 cents. So market not really reacting, I think, to that headline earnings number, but maybe just encouraged that the business is starting to look like it's turning around.
All right, Gary Booysen, thank you very much for your time this afternoon.